Greetings, Dr. Jeffrey Scott. This is my Market MRI Pro update for August 26, 2025. Wednesday will be a big day as we get NVDA earnings, and based upon the market cap and the expected move, market participants are expecting a plus or minus $275 billion of market cap if it hits the expected move either way. Wow. You wonder, will this have a lot more to do with the next couple of months and the finish of the year as we see whether the AI trade is still on or not than even what the Fed does in September. Again, my name is Jeffrey Scott, marketmripro@gmail.com, Google Group top-down trader. Sorry I missed it last night. We are in the midst of a strategic retreat for my business and long night of dinner and alcohol with the people that work with me. This session is for educational purposes only. Anything I talk about should be considered education, not investment advice. The intent of the video and all my videos is to show you how I use the tools of top-down analysis. Trading involves risk. You alone are solely responsible for any investment decisions you make. I may own or intend to buy or sell any stock mentioned in this report. Trading stocks and options should be considered risky. You should always consult with your financial advisor before making trades. And I have tools in multiple platforms. The next one to be released will be MetaStock. My Google group is called Top Down Trader. How do you find it? You go to Google Groups, you sign in, you search for all groups, look for Top Down Trader, let me know how you want to be contacted. I have a live meeting coming up. I don't do these often. I do every couple of years in Palm Beach. Every year I do one in Orange County in June. In Orange County, I share the podium with 4 or 5 others, live and online. And this one's all me. I specifically scheduled it that weekend because my friend John Person, who's just an excellent trader, author, money manager, software developer, got some great indicators, does his seminar October 24th and 25th. And that way people can stay over and do mine as well. 2 packed days of education and software, or 4 if you do both. Cost is $12.50. It includes all your meals, including breakfast and lunch on Sunday and Monday, snacks all day, coffee all day, soft drinks, water, etc. And then weather permitting, a dinner cruise on Stocks and Docks, my yacht. And if not, we'll go out to dinner somewhere nice on me. The hotel's a full service Marriott. For more information to reserve your seat, contact me at marketmripro@gmail.com. I'll send you a link. And once you pay, you'll be secure your seat, whether it's live or online. I do offer an online version. Anybody that attends will have a long-term $400 rebate towards purchase of my tools. It won't work for renewals. It will work for new purchases, and it will work on those where I control the price, the TradeStation app, TradingView, my Market MRI Pro app are ones that I can influence. I'll probably have some influence on Metastock, but that remains to be seen. I'm not sure yet of the model. Know your news and earnings. So Wednesday, there's no major news. Wednesday night, we've got big earnings with NVIDIA. We got Snowflake as well, but hey, the world's NHP and CrowdStrike and Viva, but the world's going to be watching NVIDIA. What's the story with the AI trade? And then on Thursday morning, we'll have jobless claims and GDP. And then on Friday, we have the PCE. So I think this market has lots of opportunities for volatility before the week is done. It's a judgment call to hold stocks over earnings dates. It's bad judgment to not know when your stock's earnings date is scheduled. The E index, which I thought was rolling over, especially with this candle, actually had a nice move in a person buy signal today after a kahuna, which is a momentum signal the prior day. It's not dead yet. I still am concerned until it breaks the 50. I won't say it's living either. It's just in that place between life and death that we pass through. For more information about if you have any tech issues with the program, coding at Market MRI Pro, that's Praveen, the developer. He fixes all the issues. And anything else, reach out to me, marketmripro@gmail.com. Software questions, feature questions, register for the meeting, and consider joining Top Down Trader, the Google group. On to the charts. So let's start with the daily breadth tool. We can see that the Russell was up 0.83, spiders 0.42, 0.4 in the Qs, Bitcoin was up 0.35, and diamonds were up 0.31. All of these were in the upper half or upper 2/3 of their daily range. The dollar finished in its midline down a quarter, and volatility was down just a tad. So not bad at all. If we look at the new high, new lows, or the new highs minus new lows at 52 weeks, 12 months on the NYSE, triple digits, approaching triple digits on the NASDAQ, that's showing some strength. As we look here in the first colored bar, blue or green, it's a percentage of sectors up in the various indexes, then the industries. I like to key on this. Half the stocks in the S&P 1500 were up, about a little bit more, 57% in the NASDAQ and 53% in the NYSE. So to me, a more positive day for my portfolio than it was yesterday. But in reality, it was just a little bit better than a 50-50 day. If we look at the S&P 500 sectors, what led the market today was industrials, followed by finances and healthcare. What lagged? Staples, communication, real estate, energy, utilities. Communication's been a leader. It's interesting that it was a laggard here. Over the last 20 days, it has been the leader of the S&P sectors. If you look at themes, what's working right now, marijuana, uranium, aerospace defense, gold miners, blockchain, silver, copper, biotech still making a play. Those are the ones that were up more than 1%. So you look at this, you see a relatively decent day. Breadth, kind of neutral, but positive endings. If we flip over to the timing brief, here's the weekly model. What we look at is the buy sell line, which is still green. I won't bother looking at the monthly, it's still green. So on these four ETFs, the spiders, the Qs, the Russell, and the diamonds, it's the longer term signals say be long. If I look at the daily signal, take a second to load all the data. Come on. All right, you can see on the daily signal that the one thing that's not like the others is the Qs, but it got above the WMA again, which is optimistic. You could see that the spider, the Russell, and the diamond still are green underneath. So I've got three daily longs. One looks kind of neutral. I got four weekly and four monthly longs. My model says be long. Doesn't mean I'm not concerned about the risk. It doesn't mean I'm ignoring the news. It doesn't mean I'm ignoring that September usually or often sucks. But I don't have a technical signal that says get out of the market, go short, and buy contras. I still am holding, I'll tell you exactly what the percent is, a fair amount of cash because I do think we could pull back some here or with the news that's coming out the next couple of days. And right now, after a few purchases today, I got about 42, 45% of my portfolio still in cash, which is high for me. Um, when I saw those Hindenburg omens, which we'll look at in a few minutes, it made me get a little bit cautious, just historical basis. If we look at the index ETFs, we'll look a little bit deeper today because I wasn't here yesterday. Look at the spiders. Up in here is all-time high territory. You can see back to the left, nothing. And so we are just below all-time highs. We're in a relatively sideways period of the market. We're above the 17, we're above the 50, we're above the 200. That's, in my perspective, that's incredible. That's how you want those stacked. The high-low jump is at what? It's at 72 and change. Doesn't tell me anything bad. And we had a breakout signal today. Nothing here is bothersome. Again, we'd have to break out, set new highs eventually, and I still thought, which is why I had this drawn here, that we could drop and run sideways here, and I didn't think that would be horrible. Right now, it looks like we're poised to go higher with the caveat, boy, we got some big news coming. The Qs, again, you see the big V bottom, you see the all-time high, and then the subsequent sell-off. Right now we're moving our way back up. We still got some sideways seasonality to deal with as well. I don't really see that much different here. We're further off the all-time highs here, but we're working our way back. Got above the 17-day today. So yes, it's still in a sell signal technically until the bongo switches, but I don't see anything ominous looking there. If I look at the diamonds, we had another kind of a small positive day, up 0.31. Um, All-time highs of the diamonds are, I believe we just saw them. So, how depressing or how worried can you be when you're sitting at all-time highs? Again, seasonality says sideways move. September says caution, and we got that PCE coming and a Fed meeting. So lots of reasons to have a little caution on all of this, but do I see anything that says we're going lower tomorrow? No. It'll be after NVIDIA's earnings. We'll see what happens. The Russell. Now, this line here represents the all-time high on the Russell. Again, the seasonality, this is 10 years of seasonality, says it's kind of flat here. Looks to me like it wants to go higher. So my summary of the markets is in pretty good shape, near all-time highs. Um, Markets don't go up forever. We'll look more at some breadth considerations, but I don't see any obvious ominous things sitting in front of me except the month of September. You could see the volatility index. This is the VIX futures, and that, yep, that's a 26. We're up 1%, but really look at where they are. They're bouncing around at a place that they usually are. A little bit more to go, but close to where they bottom. Not much to say about that. No signal. And then the dollar, I put this line here to see if we could stay below it. And we popped above it and we came right back down. The dollar's consolidating off the lows, but as you can see, well off the highs. So that's what I see in the markets. On the commodities front, we can see gold is consolidating after all-time highs, was up nicely, up 0.73. Silver, after both of them had kind of shooting star days on Monday, silver was actually flat today. Oil tried to break through the 50 on Monday. It's pulling back now towards the 200. It was down 2%. Natural gas, I don't even look at where it's sitting. So the 10-year was down 0.21. The 30-year was actually up 0.55. So I guess that's steepening of the yield curve, which is good for banks. But I think the Fed really wants to keep a handle on the 30-year bond and not let it run to the moon. And there's been all this talk about the bond vigilantes, and if they do a rate cut, certainly if they do a 50 basis point cut, it might make the president happy, but it might have the opposite effect than they want on the 10 and the 30. That's why I like to watch them. The buckets give me a sense of overbought, oversold. We've moved a little bit towards the left. I'd say I would use the word neutral here. Not bad, not great, not but nothing concerning. The market breadth, you could see this is the NYSE on the left. Let's make it the bars bigger. Left is the NYSE, the right is the NASDAQ. You could see that the NYSE is sort of flagging after setting all-time highs. You could see the stocks above the 17, 50, and 200 have moved higher. They're getting kind of to an area where you start to wonder if you're getting overbought. You could see on the day, new high, new lows positive, a D line positive, up, down volume, and no signals the last two bars. The NASDAQ had nah, it probably doesn't count as a high close doji. It didn't close above the upper wick. NASDAQ had a nice bounce today. This is the composite. Also a little bit off its highs, but not horribly. Again, the new high stocks above the various moving averages are creeping up. You could see all three new high, new lows, AD line, up, down volume are positive and no signal there. And I guess one thing that makes me feel a little bit better, certainly about the NASDAQ, is we've now dropped to 0.86 on the 13-week new high, new low. We're at 0.82 on the NASDAQ composite. The S&P 1500 is still elevated at 0.93 and the Russell is 0.95. So the stocks that the indexes which have been weaker the last couple of sessions, the S&P 1500, which wasn't weak today, and the Nasdaq. They've cooled off more. The others are not quite, although the Russell's at that point where the 13-week new high, new low says we're probably getting close to a pullback. But all in all, I think there's been improvement since over the weekend. We're less extended, and maybe I'm less concerned. But I do think we're going to have a binary nut day. I think that you know the day may not be very loud, um, and I think the question is what happens here after hours. You can see NVIDIA after selling off last week. You had Friday, Monday, and Tuesday a pretty nice increase. If you look at the weekly chart, you could see a little orderly pullback, a bottoming tail, and on the week thus far, we're up 2%. Seasonality doesn't look bad. Strong earnings must probably be accomplished, accompanied by words on China and the blocking of their H20 that don't spook the market, and then forward guidance that keeps the momentum going. Such a big stock, 8% weighting in the Qs, close to that, I think, in the S&P 500. If this thing has a power move up, it'll bring the indices with it. And if it trades off hard, it will take them down. That 50, which is sitting at 137, which is, you know, excuse me, 33 points away or so, 43 points away. I'm sorry, I used to know how to do math. No, yeah. Um, would not be a crazy place to expect the stock to pull back to. I think the expected move is like 16 points. Um, it'll it'll be an interesting day. Some of you are probably like me and have this is your biggest position. I put some collars on it today. It's big enough that I can't risk a big move. I can't. I'm not retiring tomorrow and I don't need the money tomorrow. But I like looking at my numbers and it would have a big hit if the market sold off. So I protected it. I hope the market, I hope it goes higher. But I'm protected if it drops, at least for the first 20 points or so. If we look over here, you can see 3,695 stocks made my cut today. Each of these is identifies a sector and an industry group. And if I go to the top-down perspective, you can look here and see with 3,600 stocks, the leading stocks were utilities, leading sectors, healthcare and industrials. We'll add the financial services. Over here then are the industry groups in those sectors. Let's rank them by today's move. And we can look at power, asset, transports. Oh, big, lot of different stock types. 2, 3, 4, 5, 6, 7, 8. All right. And then down here are the 554 stocks in my universe from those 10 industry groups. Let's quickly filter this down by reducing it by prices have to be over $5 and 500,000 shares traded brings me back to 243. And so typically I have different ways of looking at this. One thing I like to do is look for pullbacks and uptrends. Hit OK. That's 50. Rank them by the number of positive up impulses. Let's just see if anything looks good. HEI is a defensive play. So it's in a nice move, a little bit of a pullback to the 17 and running. Seasonality looks okay. All right, RTX is a defensive play. That nice little run, little pullback and breaking out. These are not cheap stocks, and you have to start looking at the high jump. There it's 94. That's a little bit high for me. That one's 85. I could still buy. Dawn is, I thought, I guess Dawn's not being bought. Day one, biotech. Biotech made the list. Hard to see, I guess, if you just look the last 3 days. Bank of Montreal, beautiful breakout here. Um, very positive seasonality here. That might be one to consider. Another Canadian bank. So that's two Canadian banks. SPR, Spirit Aero Systems. I thought that these guys were being bought by Boeing. They're either being bought by Boeing. Yeah, they're being bought by Boeing. So you have to look at the deal and see what the discount is and whether you think it's going to close. So Biohaven was one I looked at. It's bottom fishing, and I'm not a big fan of that. Um, and why is it showing two dots? It has this dot here. I'm so sorry. I'm on the weekly. That's messing me up. So HEI pullback breaking out looks good here too. It's an expensive stock. RTX, very similar. Nice little shallow cup. Maybe a handle and a breakout here. That looks great. Squeeze, momentum breakout, volume, and the CPR. Day one, way below the 200. So Bank of Montreal looks great even on the daily. It looked great on the weekly. The one concern would be its high jump, it's extended. Doesn't mean you can't buy it, but you got to be careful and expect it to pull back some when it gets this stretched. Um, TD Bank probably looks a little safer. Really been basing sideways since June, and it had a big move in the market on Tuesday with a coming out of the squeeze, and you have momentum, breakout, and volume. That one looks interesting. So I will typically go through this list and look at a lot of different things. There's Spirit again, and see if anything's got a pattern I like. One that we did like this week, and I still like is Amalex. I did buy it on this breakout here. Took a little heat yesterday, and it had a nice move today. I think it's still reasonable up here. Was going sideways, as you could see. So I like to look from a top-down perspective. What I loved over the weekend was Rocket Lab. And why? Because, and I'm in it now. I said, if it takes out this line, I want to be in it. Now, I don't like this close. Yes, it was up nicely today, but that's kind of a shooting star looking close and can be a bearish close. So I may have to watch that one. So I love top-down analysis. Best sectors, best industry group, best stocks. And why I like these is because if the market is up tomorrow, there's going to be leading industry groups and sectors, and you have a better chance making good money when the market's up and you're in an industry group that's doing well. Now, I also have the I can't help myself, which is bottoms up. When I want to look at all those, take out my filters, 3,600 or so stocks, 3,695, and two things I like to do. One, I'll do the exact same thing, which is hit uptrend 5 and 500. That's just my personal preference. Hit OK. Rank it by number of up impulses. Let's see what we got. HEI we looked at already and we liked it. SMTC. When I switch to this one, there's always a little lag. There's SMTC, big breakout. Well, has it run too far? High jump is only 43. Maybe not. And look at all the blue dots. So you had an came out of the squeeze, you had a PSAR reversal, you have momentum breakout, volume, and a gap, all the things that I like. SATS, this one had a big transaction with AT&T today. There's RTX that we looked at before, beautiful little cup and maybe a handle and a breakout. HSAI, I like the pattern. At least I like this pattern pullback. Looks pretty interesting here. It's also, this is not expensive. That was a different one that was expensive. I believe this is an auto parts stock. Look at the earnings per share growth. This is what's been driving the stock of late. You could see revenue is growing. It's a relatively small cap stock, although not anymore. It's got 13 billion. Its multiple is huge, but it reflects the big growth that we're seeing. Um, Gilt, another satellite network, probably sympathetic to SATS. So I'll look at it this way. There's your BMO again. There's your Dawn. I see the same stocks no matter what I do. I am playing uranium and I bid in UUUU. And like one of the other stocks we saw today, I don't love this topping tail. And if we see the high jumps at 100%, this is one that I probably should take profits on. And it's extended. It probably pulls back before it goes higher. That's how I like to look at the market. One other trick I do is let's clear those. Let's go to my secret weapon, 2 days of momentum, $5, 500, and we don't have any today. If I take off, filter, and just look at the 2-day momentum, you don't always get them. And these are all problematic for a reason. Either they don't have enough volume or they're too cheap. Shoulder innovations, don't know what's going on there. Doesn't meet the 500,000. AMBQ, MB Nitro, Micro, it's an IPO. AUST is a cheap stock breaking out. LWLG, I love the pattern. Run up, pull back, and breaking out. Massive volume or earnings out. No earnings, it's a cheapie. It might be, it's not an IPO. This one looks actually interesting from a cheap stock perspective. Now, of course, after a move like that, the high jumps at 100, and that would make me wonder a little bit. Omex, another cheap stock. Tech Robotics, another. The signal here are these two blue dots in a row. Over the last, since the product was made, that has come out to be about a year now, the most consistent signal that I like. We don't see one. We saw a number on the top-down perspective. I'm going to be patiently waiting those NVDA earnings because, um, like many of you, after splits and things, I got a lot of shares, but I'm fat with profits on this. My cost basis is probably in the 50s, if not lower. So I'm holding pat. I did put collars because profits are profits, even if you still make money because you bought it way below. Let's see if NVIDIA can give us another leg up in this market and give the big finger to September. Take care, everybody.